Typically, the first place I start from a profitability standpoint on growth is let's look at revenue. What's my pricing like? Have I raised prices recently? How am I compared to my competitors? What is the industry like? Am I able to kind of maximize the amount of money that's coming in?
Okay, this is a podcast I've been looking forward to for a long time. So welcome, Jared.
Hey, thank you. Happy to be here. Looking forward to it.
Yeah, so we have Jared Westergard. He is the co-founder and managing partner of Sonoran Business Advisors. And something that, over the years I've been doing the podcast, I haven't spent enough time is the financial aspect. We've grazed upon it, touched upon it, but bringing you on, Jared, kind of changes this because it's funny. I think I heard this from Mark Williams, who I've had on before, a friend of mine, and he says, you know, um, a bad contractor who's good at business will always be in business, but a good contractor who's bad at business will never succeed, right? So essentially, at the core, it's business, right? We have to understand operations and financials. And, the reputation is us builders are typically the weakest when it comes to the financial side. And I know that's your strong suit, Jared, from working with so many builders in our network. So maybe we start here. When you look at accounting processes that a construction company should have, what's priority? What should they have dialed in to start with?
I think that's a great question. You're right. When you're looking at accounting processes, I think some of the key areas or issues that I've seen that have caused problems in the past are when there's unknowns. And so, when a business owner or perhaps an executive or somebody just doesn't have an answer to a question that may arise from, hey, what's our overhead? What's our burn rate? What am I going to make next year? What did I make this year? And so having those type of unknowns or questions a lot of times kind of creates frustrations and confusion. And so for my end, typically what I like to tell people is, the more information that you can have, the better you're going to be prepared to make decisions that are, timely, that are appropriate, and that will allow you to kind of take that next step for whatever it may be that you need to do. But I don't know if that answers, but I mean, that's kind of, what I think from that perspective.
When you speak about the unknowns, which I can relate to, I think many of us, I know early on in my career, you only know what you know, right? And so as
Yeah.
you're looking at this, you may not fully understand burden rates. You may not fully understand what every employee costs you, when to hire, right? When you speak of unknowns, what are specifically to construction you're dealing with? Are there examples of where customers just aren't aware that they're not sure when to hire because they're not really sure on their monthly income? They're not sure, and I know this maybe ties into like bank reconciliations where they may have deposits, and so they may look at their account thinking, "Hey, I'm pretty cash, heavy right now because I have these deposits," without realizing these are liabilities, and so they may be over excited about the money in the account, not realizing that this is accounted for, and they may not be making as much profit as they thought.
Yeah, no, you're exactly right. It's a lot of the unforeseen or unplanned expenses, right? And so it's going into a situation where maybe you have an expense that comes up that, hey, look, let's look at sales tax, for example, or insurance. From a contractor standpoint, when you may have budgets or different things that you're trying to adhere to and follow, the questions are always, well, are my projections including all those additional expenses that I'm going to have to pay? So for my revenue, when that's coming in, am I calculating sales tax on top of that revenue, or is my sales tax being, is it being calculated less that revenue? And so I think those are some of the unknowns, at least from the business side, where, as business owners and whoever it may be, if they have those answers in front of them readily available, it allows them to kind of project a little bit better, and try to forecast those unknowns. A lot of the time, from it can be in a number of different ways. There could be unsuspected, or it could be, hey, we didn't anticipate growing this fast, so we had to go out and hire 3 or 4 people this year, and with that comes an additional overhead and benefits and different things on that end. And so I think, as if you can kind of dial in those unforeseen and unexpected costs and try to eliminate those, or at least try to account for them, I guess probably be a better word. That helps a ton. I mean, it goes a long way.
Well, maybe walk through that complication. You mentioned taxes, which I think is kind of interesting because for a point of reference in Arizona, when you're doing a remodel, you're paying taxes on point of sale. So you're paying wherever the materials purchased. So in Scottsdale, it could be 8.05%. It could be different in Gilbert, it could be different in Surprise or Phoenix. When you're doing general contracting work, you have an adjusted rate at 65% of the tax rate, and you're paying out material and labor. So how can, if a builder doesn't understand, first off, the tax code, how it relates to them, and then they don't understand how they should be charging it, especially on a monthly billing, whether they're lump sum, whether they're cost plus, how that can impact them for either paying too little taxes or they're paying too much.
Mm-hmm. Yeah, I mean, it creates a cash flow issue, one way or the other. Whether it's, hey, look, I'm paying out too much money and I should have more in my pocket, or hey, I'm not getting enough to cover some of these costs. Typically what I've seen as an example would be, let's just take, your typical budget or your typical line item in a construction job. And so you may have an estimate or a budget of a certain amount. Let's just call it landscaping and, $50,000. Where the trouble comes in from a cash flow perspective is if somebody is saying, okay, hey, look, moving forward, $50,000 is what we have to spend. In reality, what you have to spend is the $50,000 plus the sales tax, and plus, if you're charging for any type of labor or if you have any overhead or anything that goes into that, depending on, your contract and whatever you've agreed upon, there's an additional cost built into that 50,000. So although that hard cost may be $50,000, if you're not accounting for that and adding that on top of that 50,000, now you're out whatever those sales tax numbers are. If you're coming back then and saying, hey, look, we're going to calculate our sales tax on this 50 grand. Well, we're going to reduce it and deduct it from that 50. And now we're only making, 40 something. That's where you start to see some cash flow issues because, your money is being paid when you really could just keep it in the bank. But
I think that's a good example. Yeah, that's a really good example because if I break that down, if you say, okay, the client has $50,000 max that they're spending has to be all in. Well, truthfully, the client may be spending 40, maybe 35, maybe 30, whatever that is, because you're building in overhead, profit margin. In a cost plus scenario, on the flip side, the client may have 50,000, and if they're only looking at 50, their real cost may be 60 or 62 because you have to add in these other costs. And that's where, if you're not being upfront with the client, this can get out of hand really quickly as they're making decisions by not factoring in all the other costs, including tax, because that 50,000 by itself is essentially tax exempt, but you have to account for tax. And so it has to be added on one side or the other.
Yeah, no, exactly. I think, perfect.
So how does WIP, something that a lot of contractors struggle with, this has been something that's been, a focus of mine for a while now, especially being in my Builder 20, is working on a really defined WIP, right? Work in progress, because again, this podcast is not going to be a tax strategy for end of year. Everyone can work with their CPA, but there are advantages to understanding WIP and how that relates to profitability and to your company and end of year. And there's a lot of legalities behind it that you can consult with their CPA. But as far as just a month to month to know health, profitability, as you mentioned, to have some unknowns covered to figure out, can I go buy a truck, go buy a vehicle? Can I expand? How does WIP dictate profitability on a month to month and year to year level?
It really starts with accurate records, I think. And so what I mean by that is, being able to calculate WIP is one thing, but being able to calculate WIP correctly is another, and give you information that's actually, reflective of operations. And so, one of the real purposes of WIP is to kind of let you know at any given time where you stand. I always like to tell my clients, it allows you from an accrual accounting perspective to kind of forecast on your financials how much money you anticipate collecting over, the next certain amount of time, how much money you may have earned and or collected for these jobs up until that point in time. And so, forecasting, okay, well, what are my potential liabilities? Am I overbilled? Have I underbilled my clients? Where do I stand? And truly understanding that perspective makes a big difference. I'm sure you've probably seen that, like in your business, of when it comes down to end of month or end of year, looking at WIP as a total, kind of if your billings aren't in accordance to where you feel like the project timeline is, or with the work being done, that kind of can be a hindrance on what you're trying to accomplish, and it can kind of create complications with the owners or the banks or whatever it may be, if those numbers aren't adding up or accurate.
It's really insightful, because as I've worked with yourself, Jared, others, going through the WIP specifically, I've seen how there has to be an exact mirror image, right, of what's happening in the field to what we're showing on paper, because if not, that underbilling and overbilling can be exacerbated and really create confusion on where we're really at. And this ties back into the bank reconciliation. We gave the example of deposits, that if I'm overbilled, I may think I'm more cash free, but I still have bills coming that I may not be aware of, or at least be tracking. And that's where that WIP comes into play, because now I can really track month by month profitability. And in fairness to WIP, there may be some months where you could be down, some that you could be up, but at the end, it helps you track overall for the year goal.
Yeah. And, as a business owner too, it allows you to understand probably a little bit better, okay, I have this amount of cash in the bank. What can I do with it? If you're saying, hey, look, I still have all these, if I'm overbilled and if I have a surplus in cash and I still have some tasks or projects to complete for these jobs, I know there's going to probably be some additional cost on my end that goes into that. So I think that helps you, at least also from a cash perspective, be able to plan and know, okay, this is where I stand, and maybe I can use, some funds in the bank if I need to buy another truck, or if we need to hire, additional personnel or whatever that may be. But I think it just gives you a little bit more insight as well.
Maybe, if you don't mind, Jared, break down, because there's a couple ways to do the accounting, right? You can do an accrual basis, you can do, cash basis. Maybe walk through pros and cons, or really the separation there for those that may not be familiar.
Yeah, no, for sure. So I feel like most companies, when they start out, most people, small businesses in general, start out on a cash basis, or what we call cash basis of accounting. And so typically cash basis, it's super simple. It breaks down everything from transaction date. So cash in, cash out. What day did I get it? What day did I spend it? And so if you kind of break it down into that perspective, that kind of gives you an idea, at least from a financial statements, standpoint of, okay, these financial statements are reflective of at a certain amount of, certain point in time. But I guess some of the cons that would go into cash accounting would be, well, what was the period that I'm looking at? What did it truly represent? What truly happened for the month? Let's just say the month of January. What, from a company's perspective, what did we accomplish? If there's, are there any type of prepaid expenses that I had to come out of pocket for that maybe pertain to future dates down the road? Was there a payroll that fell on, February 6th that accounted for some days in January and a couple of days in February? So, there's those different questions from, an owner's perspective that I think a lot of people have of, okay, well, do I want to know what truly happened for a given period, or am I comfortable with just recognizing things as they happen? And so from a projection standpoint and from a growth standpoint, I'd tell you typically as companies start to grow and as companies start to mature, there's usually a transformation from cash to accrual accounting. I personally feel like accrual accounting just provides more detail. The balance sheet, I'm going to get a little accounting nerd brain right now going into this, but from a balance sheet perspective, when a company is keeping their books on an accrual basis, you have additional things on there that you can use to report to a board or to other owners, to banks if they're looking for it, for example, like an accounts payable, an aging, or what is our true accounts receivable at any given point. I mentioned this already, but prepaid expenses. Are there expenses that I may have paid for in advance that should be recognized monthly throughout the year? There's just a bunch of different things that you can do from that perspective. That when you're on a cash basis of accounting, you're not typically required to do or often do so.
Do you ever see, it's interesting to bring that up because I feel with the flexibility, it's a must. I know we're accrual and you have to be, because when you have projects that are multi-year, 2-3 year projects, you're going over fiscal terms there. How feasible, in your opinion, would it be for a contract to do cash accounting when they have long bandwidth projects?
It can happen. I've seen it, but it can cause headaches sometimes because, from a liability standpoint, as if a job goes south and if you haven't collected on money, if people come back saying, "Hey, look, this wasn't done according to what we agreed on," sometimes what can happen is it's like you have to either come out of pocket to front those differences, or you're not going to be able to collect on work that's been performed. And so it's, how do you track that? How do you keep a project in your WIP schedule, and how do you keep the details of what's going on readily available to you at any given time? And so that's, I think, one of the benefits of going the accrual route. It just provides more information for you to know truly, okay, what are my liabilities? Where do I stand? How much money do I need to be collecting? How much money am I owed? I don't know if that makes sense, but I think that's probably what I would say.
Well, I think it's a great example, because for any builder that's kind of breaking this down, as you think about it, if you're doing like cash flow accounting, you may have a project that's going great through December. Okay, we're expecting this profit margin. You could have had a high month of billings in December just because of the stage phase of construction. So I'm looking great. Cash is coming in. I'm closing the books. Everything looks great. Then come March, we have a really slow month, or as you mentioned, I'm not getting my final check because punch lists or legal issues or whatever. And then all of a sudden that profit margin changes. And now you may have paid taxes based on what you were projecting in December. You may have spent that money already on end of year stuff for you or your employees. And so that's where that carryover, you may count your eggs too soon in that basket before they hatch.
Yeah. And, even from a reporting perspective, let's say, we're at the end of the year and you're, as a business owner, trying to obtain funding. You're going to go to a bank, you're going to provide financial statements. If on a cash basis, let's say you had a bunch of work that was done in November and December. It was billed out in December, but you didn't receive the cash or the payment until January. If you're on a cash basis of accounting, your financials are going to show that revenue came in January. And so when you're providing those year-end financials to a bank, you're going to have all those expenses that you incurred, in November and December related to that job because you had to pay subs and other costs. But that revenue that came in, it's not recognized in that same year. So it's not a true kind of picture of what you actually did as a company in that time period. It's more of a matter of fact, this is when we got the money in. Revenue is recognized in January because that's when it hit the bank versus when we actually did the work and when we billed for it.
Yeah, it's a really good example. As you have worked with so many companies, Jared, over the years, do you feel that the point of struggle for builders specifically, is it more related to AP or AR?
I think they're interrelated, but I would say it starts with accounts payable. Just because I feel like from an accounts payable perspective, there's so much that goes into it. You know, being able to pay subs quickly to make sure work's getting done, being able to understand, okay, is this cost of sales? Is this administrative operating cost? Am I going to be able to bill the client for this? Which then ties into your monthly billings or your billing schedule on the AR side. And so I feel like a lot of what happens in accounts payable affects AR, and for that reason, being able to just have processes and procedures dialed into where hey, we're capturing everything that we're spending, credit cards, if there's anything that's billable to a job, anything like that, being able to make sure that that's captured every month or every billing period allows you to then turn around from an AR side and say, hey, look, we got to get paid for this. Typically, I think most people probably are better off from an AR side, just because in order for a company to run, you got to get paid, and so as a business owner myself, I know I'm always looking at, okay, who owes me money, what's going on, like I got to collect. And so that's at the top of my mind quite a bit, but I feel like sometimes people can forget or be a little bit loose on the accounts payable side, which can affect you from a business perspective just in a number of different ways, negatively as well.
It's funny how, as a business owner, you kind of mature, understanding the AP side. And the reason I bring that up is because I'm cost plus. I've been pretty open about that here on the show and speak about that, especially with the complexity of projects. But where I've seen this has become incredibly complicated for my team and I is that if you don't have your AP dialed in for a lot of reasons, you mentioned credit cards, which are impactful because if I have job related expenses that have to be factored in, if I have invoices on hold, we track on hold invoices and they could be on hold because subcontractors bill them more than their contract. It could be change orders that were verbally approved, or I shouldn't say verbally approved, but essentially approved, but not signed off. And so there's these different layers of the AP side. But if you're not collecting all the AP in an organized way to understand these bills that are coming in, it's really hard to now take that information, digest it, put it in the AR to build a client, because you and I can, make the phone call. Hey, we're past 7 days. We need our money. You got to feed the meter. But it's the AP that can get messy by decisions not being made, overlooked, receipts missing, everything that goes with it.
Yeah, 100%. Yeah, totally agree.
So what about do you find the same example? Because I know for cost plus, I think it's pretty straightforward that AP is probably our biggest offender, or at least something we have to manage the most because everything's backed up and audited and sent to our clients. When you're working with builders that are lump sum, paperwork's probably a little cleaner. And so AP may impact them just on making sure trades are paid to be on the site. How does that change kind of the pendulum, for them, just maybe focusing more on AR as opposed to AP?
Yeah, it changes a little bit because obviously they want to make sure subs are paid, work's getting done, people are happy. From that standpoint, what usually tends to happen is if you're not accounting, if you don't have accurate records from the AP side from some of those lump sum projects, what you start to see as you come to the end, now as a owner or as a business, you're having to kind of cover a lot of those expenses instead of coming back and running that back to the client, whether it's, hey, look, there was leftover money that we weren't able to bill on the bank loan, or hey, look, the client can't come out of pocket what we've incurred from a cost perspective. There's a number of different things that go into play from that end. And so I think even more from you mentioned the lump sum side, having an accurate budget up front and an estimate of project cost really allows you to kind of, the more accurate and the better you're able to predict those costs, or at least stick to the budget throughout the project, the better off you're going to be from a profitability standpoint.
as you're working with all these business owners, I would imagine that every business owner has their own level of, call it sophistication, understanding of accounting, retained earnings, balance sheets, income statements. How important is it for an owner to, they may not be an accountant by trade, but how important should their understanding and, how well versed should they be in understanding the financials when you're presenting information to them?
Yeah, it ranges. I think I've been lucky enough to work with a bunch of different types of people and owners of businesses. One of the reasons I started Sonoran was because of that. I love business in general. I love the idea that there's so many different types of companies and industries and ways people can make money. Um, One of my kind of taglines that I always tell people is focus on what you're good at and let us do the rest. And the reason I say that is because a lot of times, there's business owners that are really good at getting out and selling or performing a specific type of work. Yet when it comes to the financial side, it can be daunting to look at a financial statement or a P&L and understand what's cost of sales, what's expenses, what are my overhead calculations, am I paying too much in payroll, like what are all these different questions that go into it. Am I actually recording things correctly? Do I put a loan on the balance sheet? Do I run it through the P&L? Like all these different questions. And so one of the reasons I started Sonoran was to kind of step in and help business owners with that and say, hey, look, you need to understand from these different angles what's going on your business, because if you don't, then you're not going to be able to make those key decisions. But all the detail that goes into creating these financials and to making sure things are recorded correctly, let us take that off your shoulder. And so I love to educate people, especially all my clients. I love to sit down with them and kind of help explain, hey, look, this is what this means. This is what gross profit means. This, and it probably differs, from industry to industry and the type of company. Some numbers are more important than others. And so what are the numbers that you need to focus on? If it's a very, cost heavy company, what are all the extra variable costs going into your financials every month? How much are you spending on meals? How much are you spending on, stuff that really isn't, a fixed kind of operating cost per se. So, yeah, all kinds of stuff.
And before we get back to that, because that tagline's really interesting, I want to touch on that, but maybe walk through essentially how you got into being a fractional CFO. You have experience working as a CFO in-house for a company I know, and
Yeah.
mutual friends of ours. So, kind of what made you pull the trigger? What changed that journey and led you to where you are now?
Yeah, no, that's a great question. So yeah, I out of college, I was in public accounting and auditing, and so I spent almost 10 years doing that. Loved it, and had a number of opportunities to continue down that path. But what I found was, when I was out with clients, performing audits or reviews or compilations or whatever it was, I was really intrigued from the standpoint of how do these guys make money? How does what do they do? What do they do differently than their competitor? And I remember one of my managers when I first started at the firm that I was at told me, hey, as you go into this, put yourself in management's position and try to, see the whole picture from their eyes. And so I used to always do that. And I used to love kind of taking that approach. And so, eventually as I started to mature and grow and understand, I think, the complexities that go into running a business more, I found myself gravitating more towards, helping those managers. Excuse me, I'm going to take a drink real quick.
Yeah, you're good.
So, and that eventually led me to taking a position, like you mentioned, with a couple of friends of ours over at Green Mango, and they love them. They're just great group of guys, and they have a bunch of stuff going on. And so, under their platform, they had, 4 or 5 entities that they were that they owned, that they were running, that fed off of each other. And, as CFO, I was kind of responsible for going through and making sure things were tied out, things were working from a financial side. And so eventually what I found was I loved doing that. I loved the complexities. I loved the different variety on a day-to-day basis. And excuse me. And I loved exploring different ways to help these companies, whether there was, a pest control, or whether it was a cleaning company, or whether it was, a detailing company or a solar company. These guys had built great businesses, and I found myself really enjoying the variety. And so, a couple years later, I ended up deciding to kind of move on to the next stage and create Sonoran. And the reasoning really was just because I wanted to continue to do that, and that kind of fed, my drive, I would guess you would say, to go out and reach out to small businesses. Really any business of any size, and kind of help them from a CFO side understand that, hey, look, even though you may not be able to hire a CFO, or maybe you don't need a CFO full time, there's different things that a CFO can provide from a strategy standpoint and a projection or a budgeting standpoint that could help you. And then it's kind of transformed over the last couple of years since we started to adding more services, controller services and bookkeeping services and different things like that. But that's really, I think, what kind of fed my my drive behind creating Sonoran and trying to kind of provide that service.
How risky was it for you when you were, you're in the auditing business, which, correct me if I'm wrong, but a lot of accountants will come out of college, and they go work for the Big Four. They're pretty heavily in accounting. And I know there's this pivot point where, to become a partner high in there, you really got to start closing deals and bringing in clients. And, but there's hours they bring you in, they kind of wine and dine you in the beginning. Yeah. It's the best, when at least when I spoke to, they come out to the Big Four, they're like, we had the best recruiting trip. It's amazing. And then you get there and they're just grinding you, you're working 60, 70, 80 hours a week. And there comes this pivot point where some go private, and you end up going private. You end up working for an amazing up and coming firm that has done really well here in the Valley and has expanded. But again, I think many of us, and maybe you had some exposure to, as you mentioned, working with businesses at the, at the auditing firm. What makes you take the risk to say, I'm ready? Because it's not like you had a book of business. You had been working for a company now, a private company for a while. So there's a lot of risks. And then as a fractional CFO, you're hiring staff, there's sales, there's all the complication, just like we have as, running our business.
Yeah. It's funny. I can think of one example in particular when I first questioned, my future in public accounting. We had a client, and we were out by the Diamondback spring training stadium, and it was in March, and excuse me. And I'm sitting in there, and the window I'm looking out of as I'm working oversees Salt River Fields, and I see the crowds pouring in. I see the baseball game going, and I remember thinking to myself, man, I really wish I could go to that game right now, and it was a busy time of year. And don't get me wrong, the company was amazing. Love the company, love the people I work with, love the clients I work with. But
which, real quick, if I interrupt you, it's funny because in March you're not going to a baseball game.
Yeah, no.
Tax season.
That's that's the question I asked myself. It was, hey, do I really envision myself doing this for the rest of my professional career? And I kept coming back to, I want to be flexible. I want to be taking clients to the spring training game. I want to be out there, doing those type of things. And so I started that's kind of what I think spurred the idea in my mind of how could I create a profession using what I've learned. Don't get me wrong. I feel like there had to be a time of growth and learning, at the firm. I had to be in a position to where I knew what I was doing. I was confident enough to make that change and that leap, and use kind of my, education and experience to help me. But I think that's slowly what kind of started to spur the idea of, okay, how could I make a pivot and do something because like you said, the path to partner, whether I wanted it or not, was probably available if I really kind of buckled down and started to kind of focus hard on that, whether it was with that firm or somewhere else. But I felt like for that moment in time for me, I think that's when I made the decision that I was going to start to look at something different.
And now going off on your own, finding your own clientele who you could take to these spring training games. What was there a moment in there where I think many entrepreneurs, did you ever question, like, did I make the right decision? Or maybe you just from right away, you're off to the races. What did that look like, that transition into starting your own business?
Yeah, I still often sometimes have questions about, should we be doing something different? Should we be offering other types of services? Stuff like that. But yeah, I mean, for a while it was challenging, just from starting a business. You probably know how this is. And I would imagine a number of listeners on this podcast know how this is, that when starting a business, you have a limited amount of income coming in, and it's really up to you to grow it. But you also have expenses, and as you grow, those expenses go up. Payroll goes up. Payroll is probably one of the biggest expenses for companies. And so one of the challenges from my end was being able to still have the mindset of growing a business and being an entrepreneur. One of my favorite books, The E-Myth, talks about that, and talks about how keeping that hat on as an entrepreneur rather than kind of going backwards and continuing to just be the worker bee. And when you start a company, you kind of have to you have to do both. And then so as you grow, it's how do I manage my clients, and how do I give them, an equal amount of time to make sure that they're happy, while also going out and bringing in sales and trying to get new clients, and hiring employees and finding people that are qualified to do the work. There's so many things that go into it. And so, yeah, I mean, to answer your question, there's probably a number of times when I said, it'd be so much easier if I just went back into industry and had a job where I could just show up and work. But I love what I do, and so it's been great. It's just been awesome, and I feel like we're in a position now to where, personally, I see a lot of success when it comes to, and I feel a lot of gratification when it comes to seeing clients progress and seeing how they benefit from kind of some of the things that we help them learn and see and do for them. And so it's just been super rewarding.
What's interesting about just having this conversation is, I think one of my biggest struggles when I started my company, I think many young builders, designers, architects could relate, that it's really hard to understand, your value as opposed to what you charge, as opposed to forecasting growth, right? And
Yeah.
you alluded to this, that when you're hiring employees, well, now, I mean, yeah, you're making a little bit of money, whatever that is, or bringing them some revenue, but now you got to expand, you got to hire, you have to, and that changes the complexity of your business at this time. So going back to that, one of my biggest challenges was knowing what to charge. What do I charge, for a project? What's my markup, because you really don't understand your cost. For you as a fractional CFO, you're essentially, you're overseeing many operations, not just me here at AFT that we'll get into, I'm sure, here in a little bit, but you're overseeing a lot of companies. And so hiring is really important to you, because you got to make sure this arm of Jared, who's out conversing with myself and other business owners, are they competent and qualified, and do they have the same understanding and forecasting? And then you also have to know what to charge so that you're covering your nut and your overhead.
Yeah, no, 100%. And I think it really starts with the overall vision of, management and ownership of, okay, where do you want to be on a monthly or annual basis? How much money do you want to make? What's your goal? I have some clients who I want to give everything that I can to my employees. I want to give as much as I can back to them. There's other clients that are very much focused on, hey, look, we have a goal of building this up, and in 3 or 4 years, we intend to sell the company. And so we're trying to make this as big as possible. We're trying to save as much money as possible. Other clients, hey, look, we're looking to expand. We need to open a new location, whatever the case may be. I think it starts with that overall vision and goal. And so, just trying to, look at, okay, well, what's the next step? How do you get there? How do we break it down for you to make it, easier to understand? And then it really is having confidence in your people, to just perform and to get the work done, both, for me on my side internally, and then on my client's side, to also trust in them that they, they're going to be able to learn and adapt and do things as we kind of guide them and consult them.
It's so interesting because this kind of ties into a couple aspects. I think many companies would come to you to some extent and say, okay, Jared, as I'm looking at my overhead, where are areas that I could focus on to save money? But it could be different reasons. And essentially you alluded to, maybe a company's looking on an exit strategy in a couple of years. So their EBITDA, right? They're really trying to track, keeping retained earnings and looking at the financial wherewithal. So they're cutting expenses. And so you're going to give them guidance. So it's probably a broader question in the sense when a company's looking at, hey, how can I be more profitable or save money? Essentially, how does that tie into the goals of the individual and company and, their growth strategies?
Yeah, no, that's a great question. I think typically the first place I start from a profitability standpoint on growth is, let's look at revenue. A lot of times I would say most of my clients are already maximizing the amount of revenue that they can get from their customers. Sometimes, you can adjust that. And so that would be the first place I'd start is, okay, what's my pricing like? Have I raised prices recently? How am I compared to my competitors? What is the industry like? Am I able to kind of maximize the amount of money that's coming in? So those would be kind of probably the questions that I would start with. And then once you're settled in on, the where you're at from that level, then it's moving on down. Okay, what are my biggest expenses? Can I change, any of those? Payroll is usually, like I mentioned before, payroll is typically one of the biggest expenses for a company, if not always the biggest. You have so many things that go into payroll. What type of benefits am I providing for my employees? I had lunch today with a good friend who we were talking about 401k plans, and from a company perspective, those are decisions that you want to make. Do I want to offer a 401k plan? Do I want to provide that benefit for, my employees? Those are additional costs. And so I think it's tackling, going to the vision and the goal of the company of where is it that you want to be? Are you okay with trying to minimize that bottom line, or are you really trying to maximize that bottom line? So, you can go out and get funding, or you can go out and get a multiple on EBITDA or whatever it is. And so there's just different ways I think that you can go about it. But asking those key questions, I think, is crucial.
I think this is where, like, you've been such value to me, Jared, and just being open. Jared and I were meeting this morning with your team and my team. We've been integrating Buildertrend. Shameless plug there for Buildertrend as our advice. But I mean, Buildertrend, we're optimizing, utilizing like every aspect of Buildertrend now. Everything we do from every corner of that system. I mean, it's been from accounting, financial to daily logs, you name it. And so all the communication is going through Buildertrend now, and it's valuable. Of course, there's always bumps and roads and road accounting system, but this is a major transfer. We changed accounting software. But essentially getting to the core of this, Jared, is where I found value is that as a business owner, to your point, is where is the company's weakness, right? If retention is a weakness, okay, then like your lunch today, maybe we talk about 401k. What are different benefits and perks you offer employees to keep them and retain them on? Looking at the long-term goals, and then, maybe you're not looking so much profitability as today, but where you're going in revenue, as you're looking at
Mhm.
KPIs and different metrics to say, okay, if you're doing this much revenue, maybe there's an easy metric to say you should be doing, 500,000 per employee or a million per employee, depending on what their company is. And so I'd imagine you're just having these conversations like with me to say, what are your goals? Like what can I bring to you? And then now let's strategize and pinpoint and see, can we cut costs? Should we increase costs? Will that help? Is there a multiplier here? You may increase the cost, but it could pay dividends down the road.
Yeah, no, exactly. I mean, from my perspective, I like to imagine what I would do. Typically, if I put myself, again, going back to my comment, I put myself in most of my clients' shoes, and I like to envision, okay, look, if I was in their shoes, this is what I would do. And so, typically, when I bring up those type of scenarios with my clients, I'll ask those questions. Well, what is it that you want to accomplish here, or what is it that you're trying to accomplish here? And then, trying to now portray things in a way that helps them to understand, okay, this is what I have to do to be able to get there. But yeah, no, that's a great question.
So how hard has it been when you have a customer such as me that says, okay, Jared, thanks for joining the fold. We're going to change accounting software. We're changing banks.
Yeah.
We're changing billing and AR. Walk through the complication behind the scenes to, but it's proof it can be done that you're taking a company with our revenue. I'm not going to share revenue on here, of course, but for
Yeah.
what it's worth, 27 employees, a lot of moving parts, a lot of complicated builds. We're moving midstream. We have some long projects they've been working on for a while that are crossing over. So just the complication of essentially turn this Titanic ship, 180 degrees.
Yeah. There's a lot that goes into it. And I would tell you, there's a lot of time spent on the back end that I think you probably don't see, but understand, from my team's perspective, from your team's perspective as well. Um, one of the great things I would say about doing this in today's world is the use of software. You know how it is with pieces. There's different types of software. There's different technologies that can be relied upon and used to, I think, to make things work, whereas in the past it wasn't necessarily the case. And so that's one of the things that we draw on quite a bit from our side, is using technology to our advantage to kind of bridge the gap of, hey, we can come in and help you do this for less than what it costs to have somebody employed, and this is how we're going to do it. We're going to put into place these different types of softwares. We're going to put into place these procedures and processes, and instead of typically having somebody on site, maybe we're going to be there a couple hours a day or a week or whatever it is, depending on the client. We can kind of customize that. But take Buildertrend, for example, an operational software that just allows you completely to manage your operations, your jobs. Now it's okay, that works great, but now from a financial side, how do I make that into something that makes sense? How do I get financial statements? How do I get my books ready for taxes? And then how do I transfer all of that? And so that's where I think, some of the benefit from what we've been able to accomplish with you, for example, is to come in and say, hey, look, we're going to sync this up. We're going to use the software so that your team can just focus on operations, be in Buildertrend, make sure the jobs are right, make sure the estimates, the budgets, the payment, everything is going in and is correct. And then on the accounting side or the back end, we're going to make sure that it's reflective of what you're doing from an operational side. And so then you can look at it and say, okay, look, everything ties out. I don't have all these questions. Buildertrend says one thing, QuickBooks says another, or whatever your system may be. I think that's, where we like to focus on. And I think probably some of the added value that we bring with our expertise and knowledge in accounting and processes and how systems work.
Well, this goes back to the focus. It's funny how when you mention your tagline, as Sonoran Business Advisors, right? I think of it for me when I meet with clients, the goal is that they're hiring a guide, right? So essentially AFT with a guide, that's kind of how our website's built, that when you hire us, you can focus on personal life, travel, your business, whatever you've done to make you successful as our client, and let us, manage this chaotic process. And essentially you're doing the same thing. Hey, You guys go focus on operations and what you do, and we'll work on the back end. And what's interesting is we made this huge transition, and over the first month, there are a couple little things that we're like, oh, we didn't think about this. There's this. And so today's meeting was essentially just working through a couple little very, very minor kinks, right? That essentially is going to add a lot of clarity. But here we are in January, or we're in February now, but early on in the first quarter that we can make these changes and really be clear. And so with the end goal that I guess the easy application is, the sports analogy is, if you're going to run a marathon and you haven't been training for a long time and you go do that first run, I mean, I feel like your lungs are going to explode. Your legs are tired. I mean, it's pretty exhausting if you haven't stayed in shape and you go run, your first 5 miles. But over time, it gets better and easier as you become more consistent. And I tell my team all the time, like, change is hard, but change is mandatory, right? And so they've bought into change, knowing that, hey, it's going to be hard up front, just like getting out and running that first 5 miles, but it's going to be easier over time, and it's going to make things much simpler process-wise, which means less painful points, less time exhausted, more happiness at work, which bleeds in other parts of life.
Yeah, no, 100%. And I like to think that's where we kind of can come in and help, and excel and say, hey, look, let us help you understand, what we can do. And like I said, it can be done in a variety of different ways. But yeah, no, I totally agree. Being able to adapt like that is just huge.
How's your business evolved?
We've evolved, I think, into a number of different areas. I think personally, when I started Sonoran, it was very much focused on fractional CFO consulting because, personally, that's where I was and what I wanted to do. As we've been able to grow and as we've been able to take on more work and hire more people, I think we've evolved into finding that most of our clients need a variety of different things, whether it's something that's evident when we're brought on, or whether it's something that with that specific engagement or project evolves over time, and they get more comfortable with us, and they're able to say, okay, look, I trust these guys, and yeah, maybe I don't need to do this, and they recommended that we do something a certain way, and let's try that and see how that works. And so just like our clients, I think we've evolved into kind of providing, somewhat of a C-suite fractional controller back office support for a lot of our clients, to where it helps them to, and there's always different types of engagements and special projects that come up that I'll take a look at and that we'll consider. But yeah, I mean, I think it's really evolved from, originally just saying, hey, look, we're fractional CFOs and this is what we do, to now we're truly kind of consultants that can come in and look at a business and say, this is what we think, and maybe that starts up here at the fractional CFO side, but now we have these other tools that we can help you with, and we can help provide to accomplish these other things that would make sense.
Now, kind of diverting a little bit, when you look at business development, because, as you've grown and you have some talented personnel there with your company, where do these new clients come from? How do you network?
A lot of what I do, a lot of the business that I've been able to kind of generate and bring in has been referral based, mouth to mouth. Hey, look, this is a buddy of mine. I love getting out on the golf course. You and I have played golf a number of times, and I think that's probably where we actually ended up kind of discussing some of the needs that you were looking for. And so I love getting out and interacting with people. And, a lot of times I think what happens is, at least from my perspective, there has to be some type of education on, one, what is it that we provide and what is it that we do, versus, is there an actual need in my company for that? And how can I benefit from those services? And, maybe it doesn't work for everyone, but, are there areas where we could we could come in and say, hey, look, you don't need a CFO, you need a controller. Or maybe, hey, look, um, yeah, you want to hire us, but you really need a CFO. You really need somebody full-time in-house helping you. And I tell you, I typically like to just give the best insight that I can for my clients. And so even if it's, hey, look, Jared, we're coming in and we need help. We don't know what to do. We're interviewing people. I'll tell them, hey, look, let us help you interview them. Let us help ask those questions. We know a lot of the questions from, I think, the financial side that can be asked in those interviews and in those processes that will just help you as a business owner down the road and making sure that you've hired the right person that can actually do what you're hiring them to do. And so, yeah.
It is funny because we met playing golf, which is true, through a mutual friend, hit it off. And I found that, like with anything with sales, right, there's always these points of reference. There's these points of remembrance, I'll call it, because an example I always give when I think about marketing is I had a neighbor down the street from my house, and all the time, like they'd see my truck every day in my driveway, see him at the park, tell him I'm in construction. No idea, like it never registered. We connect on LinkedIn, and then they'd see my posts and they're like, Brad, I totally understand what you do. When we build a house, we're going to hire you, right? And essentially it's really understanding, okay, Jared, here's what he does. Here's his operation. Here's his business. I had a need. I call you, you meet with it that week, and the rest is history. And what's unique about your firm and what the value that you just gave, which I think is pretty unique, is that, many companies, well, one, you can service a really small startup company. You can service a really big company of 27 employees or more. So you kind of have this huge diversity of what you can handle. But even to the point where you're like, hey, Brad, if you end up bringing this in-house, I'm going to help you make that transition. And that's pretty rare. And it just speaks volumes of kind of your mentality, that there's a mentality of abundance and growth as opposed to scarcity, which has allowed your business to flourish. And that's just my personal take, being around entrepreneurs such as yourself that kind of have this, long end goal as opposed to short-sighted. Hey, I may lose this customer here, but they're in networks. They may talk to people, so I may help them hire a controller in-house, but there's still opportunity down the road for me.
Yeah, no, exactly. And I think that attitude for me goes back. I remember, I don't know if you've ever read it. There's a book called The Go-Giver, and great book. And, it talks about an individual who, that's basically who he was. He was the connector. He was a guy who knew everybody. And if he couldn't help you, then, hey, look, here's this guy, call him. I know this guy, he does my insurance, call him, or, whoever it is. So I think I always liked that idea when I remember reading the book and thinking, I love to be involved with all types of businesses. And if I can't help, then how can I, one, network and create, a contact or a friend and help them in a way to maybe, down the road, if they do ever need something from me, they know, hey, look, I'll call Jared and the guys over at Sonoran, and they can kind of help out. But that's kind of, I guess you could say, how I look at things. And I'm a big believer that, eventually things will come back to you if it doesn't work out right now, as long as you kind of put in the effort and the work. And yeah,
So what do you do for fun outside of golf?
Yeah, outside of golf. I'm a big fly fisherman. I love fly fishing. Love getting out in nature, walking a river. Grew up with my dad teaching me and my brothers up in Wyoming in the summers, on vacations, and that's one of my, I think, one of my go-tos. I played basketball in high school. Love basketball. Don't play as much, getting a little bit older, had a couple injuries, so kind of steering more towards golf and fishing. But I love going to my kids' sports activities and games, spending time with my family, going on dates with my wife, just, all kinds of stuff. I would say, being out. And I think I would say it's usually some type of activity, whether it's a Suns game or bike rides or whatever, that I'm looking to do. But yeah, all the above.
That's awesome. So for those
Ice baths.
listening, Yeah,
Yeah.
you've gotten into the cold plunge. I will say, I
Yeah.
mean, we're like promoters on here. Cold plunge. You've got me
Yeah.
into sleep 8, right?
Yeah.
We're here in
Yeah.
Arizona.
Yeah.
It's so hot that you can have these pads that like
Yeah.
keep you cold at night, which is nice.
Yeah. No, it's great.
That again, the go giver. That's Jared Westergard, right?
Hey,
So
there we go.
for those listening that are looking to look at a fractional CFO, looking at growing their business, consulting, how can they reach you? Where can they find you?
Our website, sonoranbiz.com, is probably a great place to start. You can get on there, read a little bit about who we are, some of the different services that, in addition to what we've talked about today, provide. There's a contact form on there. You can reach out and we'll get in touch with you. My email is even great, jared@sonoranbiz.com, Jared. That's probably the easiest and quickest way to get a hold of us. But yeah, I mean, look us up. I think most of, social media, X, Instagram, Facebook, we have contact points on there as well if you'd like to reach out. But yeah, I mean, that's probably the easiest.
Well, Jared, you've been amazing. Appreciate you sharing your insight and expertise, and appreciate you helping me and our company make the transition we have, incorporate and build a trend. I mean, it's been pretty incredible. So thank you.
Of course, Brad. Thanks. Appreciate it.
If you get value from the show, please support us by giving a 5-star rating and review on whatever platform you listen to. And I also have a favor to ask. We've had some incredible guests that come on and share their wisdom, their knowledge about their business. So if you have friends or family members that could benefit from those episodes, please share it with them, as well as any other business owners that you're networking with that could get value from the podcast or certain episodes. Please share those as well. Again, subscribe, make sure you're following. Any questions that you have, topics. We've had listeners reach out about certain guests that we should have on the show. Again, brad.l@aftconstruction.com. Email me for topics to address, guests that we should have on, and even if you think you'd be a great guest for the show. So again, thank you for all your support, and we'll see you next time.